Well, for a bit more on today's trading, let's bring in Anthony DePaul, Chief Executive at the Australian Stock Report. Anthony, warm welcome to the program. I mentioned there we're on track for a sixth consecutive session of gains. What can you take out, what can you read from today's price action?
Well, we're certainly flirting with that 5,400 point resistance level. I think what the market's looking for at the moment is a reason to break through that level of resistance. You were talking before about the unemployment rate. I actually think in that situation, bad news is good news, because if the unemployment rate rises, that will help force the RBA's hand to cut interest rates potentially as early as August. And I think we need that. I think we need to encourage foreign investment into our property market. That's going to help the workforce, especially in construction. And I think that we need to help our education segment of the workforce, and also tourism as well. So I actually think in today's unemployment figures, bad news is good news.
Yeah, and as we know, every other central bank around the world is cutting rates at the moment. And even though our interest rates are at record lows, I mean, do you think it's time for the RBA to act again? Do they need to cut rates again? And when do you think that that's likely to come?
I certainly do think it's time for them to take further action. Relative to yields all over the world, they only have to look at other countries as an excuse for them to do the same. So, it certainly is a way to support our economy. And, we look at as we come off the mining boom, a lot of mining sector jobs lost, especially with companies going from into the operational phase of mining. A lot of jobs will be lost on the back of that, and will continue to be over the next few years. So we really need to support our construction segment, which will be helped by a decline in interest rates.
All right, let's get back to the market moves today, and we're seeing the materials and energy stocks underperforming today. I mean, we did see a bit of a fall in those oil prices overnight. Is it any surprise, though, that we are seeing a bit of a pullback today, given the strong run-up that we've seen recently?
Certainly no surprise there. They had, especially the materials sector, iron ore in particular, have had such a great run over the last week or so. And we only have to look as far as Fortescue Metals to see its fantastic price performance over the last few months, going from about $1.70 to a high of about $4.30. Certainly a case in that part of the market as fast money is good money. And I think it's a bit of profit taking. It's well timed. Investors have had a good run, and they're taking a breather, and you'd expect that part of the market to be a bit of a drag in the immediate term as investors look to take profits, and other investors that are currently sitting on the sidelines have to weigh up whether the current prices are worth getting in and getting a piece of the action.
And it's not too late for investors to get in because, well, as we talk about, we've seen this strong run-up recently in commodities. In fact, materials have really been, the sector that's led the way all year. Given the run-up that we've seen in these stocks, Fortescue, for example, is it too late to be getting in?
Good question. Fortescue Metals, well, if you look at the analyst community, the consensus price target on the stock is about $2.90, so we're well and truly above that. And a lot of the this year's earnings FY16 earnings was based on an average price or iron ore price of about $50 a tonne. Next year, the consensus is for an average price of about $45 a tonne. Today, the spot price is 60. So what we're looking for in order for Fortescue Metals to grow their earnings in financial year 17 is for the iron ore price, the spot price, to be above, I would say above $52, $53 a tonne. And also what's going to be an impact on their earnings is the AU dollar. As we know, their cost prices are denominated in US dollars, and as we've seen the Aussie dollar weaken over the last couple of years, and also the scale that they've achieved with their production, that's really helped drive their US dollar costs down from over $40 a tonne to where it is today, around $13, $14 US. So we really, moving forward, we need two things. the spot price to be above $50 a tonne for this financial year for them to grow their earnings, and we also need them to we need to take into account the Aussie dollar in those calculations as well.
Just on the spot price, I mean, it's hovering just under $60 a tonne at the moment. Do you think that's looking a little bit frothy? I mean, has it run up a bit too hard, too fast, and we may actually be due for a pullback in the iron ore price?
Well, we saw the iron ore price go for a run from March, from about $40, hit a high of 70, then retraced, and has now found a level around 60. And a lot of that's due to China's relaxed credit. So what's happened is, in order for them to stimulate the economy, they've relaxed their credit conditions, and that's gone straight to the property market. You've seen March, their property market grow at its fastest rate for the last year. There's some cities in China that over the last year they've grown over 50% in price, which is phenomenal relative to cities in other parts of the world. So that's been a massive boost to our commodities, with steel mills having to restock and expand their production. And that's really helped iron ore miners in particular go for a very healthy run. Now, will it continue? Well, if we look at history, since 2011, the average iron ore price for the second half of the year has been 11% lower. So if history is anything to go by, we would expect iron ore price to fall for the second half of this calendar year. And also, if we have a look at the supply issues, yes, we have had the Samarco issues, which means that there's not going to be as much iron ore from that part of the world hitting the market. But, we've got the, Roy Hill coming online, and they've already organised contracts for their supply. And I think we'll have a net increase in supply when you take all that into account. So I'm actually expecting a bit of resistance at around $60 a tonne, with a bit of softening in the price as we head towards the end of the calendar year.
Okay, yeah, and as we know, I mean, expectations of more stimulus from China, that seems to be supporting the demand for a lot of these commodities at the moment. We have a lot of data coming out of China tomorrow, so that's going to be pretty interesting. But of course, we also have the Bank of England meeting tonight, and post-Brexit, economists now expecting a cut in that interest rate by about 25 basis points or so. Given expectations of more stimulus globally, is that really going to continue to under-support this rally that we're seeing in the equity market?
Well, I would think that that certainly that's a bit of a flavour at the moment. The market trying to predict how much the central banks are going to get involved to, restore confidence and boost their domestic economy. I would say, in terms of the Bank of England, they need to at least cut interest rates by 0.25 this evening. If they don't, we could see a repricing. Anything more than that would be bullish for the market. In terms of Japan, with the election over the weekend, there could be a potential. There's talk that there's going to be a stimulus package. Some people are saying in the order of 10 trillion yen. Other people are saying 20 trillion. What's going to be really important is to see where what is the value of that stimulus, where that is going to, and how long that spending is going to take to hit the domestic economy. And then once we start getting some clarity and visibility on that, we can actually see, in the Australian market, can actually see the impact that's going to have on certain sectors of our economy.
All right, fantastic. Anthony DePaul, we're going to leave it there. Really appreciate you joining us this afternoon. Thank you.
You're welcome. Thank you.